Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the sometimes baffling world of corporate filings, and let me tell you this latest filing from CNS Pharmaceuticals. Incorporated is a real page turner, a peek behind the curtain at a company making some significant moves. Alright, before we dive in, if you enjoy decoded corporate news and straight for art analysis, make sure you hit that subscribe button. We also have a fantastic community on Discord, waiting for you, linked in the description below. It's a great place to share your insights and ask questions. So what exactly is this document? Well, it's a Form 8K, a specialized report companies file to announce big timely events that shareholders should know about right away. Think major corporate changes, new hires, departures, big announcements today. We're looking at CNS Pharmaceuticals Incorporated, and it seems they've been busy. The actual report date is the 17th of November 2025. And it looks like the main event, a big annual meeting of stockholders, happened on this day. This is our company CNS Pharmaceuticals Incorporated, a Nevada-based company trading on the NASDAQ under the ticker symbol CNSP. They're in the pharmaceutical space, aiming to develop treatments for cancer and other serious diseases. One of the key things that happened at this meeting was an update to the company's 2020 equity plan. Now, what does this mean in plain English? It means they've increased the number of company shares available for things like employee stock options and awards. Specifically, they added 114,916 shares to the plan, making the total number of shares that can be issued under this plan 115,061. This is often done to incentivize employees and align their interests with the company's performance by giving them a stake in its success. But wait to raise more. They also made some really substantial changes to the company's foundational documents, the Articles of Incorporation. Imagine these as the company's constitution. They significantly increased the total number of authorized shares of common stock from 25 million to a massive 300 million shares. They also boosted the authorized shares of preferred stock from a little over 416,000 to 5 million. Why do these companies often increase authorized shares? To give themselves flexibility for future growth, such as raising capital through stock sales for research development or potential acquisitions. It's a move that gives them a lot more financial firepower, but also dilutes the value of existing shares if new shares are issued. This next section breaks down exactly what happened at that annual meeting and how the shareholders voted. The meeting was held virtually on the 17th of November 2025. To kick things off, over 574,000 shares were issued and outstanding for voting purposes, and a good chunk of those, representing about 35.52%, were present either in person or by proxy, which means they had enough votes or a quorum to make decisions. First up, the election of directors. The shareholders confirmed a slate of directors, including John Climaco Jersey, George Gimulka Jeffrey, Arkees Faith, Charles Bettina Cockcroft, and Amy Maharry. These individuals will serve until the next annual meeting or until their successors are properly elected. It looks like all of them received a good number of votes for their positions, with a significant portion of votes also being withheld. This is pretty standard, as shareholders may not agree with every director choice or may want to show their dissatisfaction. Next, the shareholders ratified the appointment of Lone Bailey LLP as the company's independent auditors for the year ending the 31st of December 2025. This is a crucial step to ensure accurate financial reporting and maintain investor confidence. The vote here was overwhelmingly in favor of ratification, indicating shareholder trust in the chosen firm. Then came the say on pay vote. This is where shareholders get to give their advisory opinion on the compensation packages for the company's top executives. The result shows a majority approving the executive compensation, which suggests shareholders are generally satisfied with how the company is rewarding its leadership for now. Following that, they voted on how often they want to have this executive pay vote. The overwhelming recommendation from shareholders was to hold this advisory vote on executive compensation every year. This shows a desire for ongoing transparency and accountability regarding executive pay. The company's board of directors agreed with this and will indeed conduct an annual say on pay vote going forward. Now, this is a big one. This proposal directly relates to those amendments we talked about earlier. The shareholders overwhelmingly approved the increase in authorized common and preferred stock. As we saw, this means the company now has the power to issue significantly more shares, which, as I mentioned earlier, gives them a lot of strategic flexibility, but also raises questions about potential dilution for existing shareholders. Similarly, the shareholders also approved the amendments and the increase in shares for the 2020 stock plan. This means more stock options and awards can be granted to employees and executives, which is often a key part of retaining talent in the competitive pharmaceutical industry. Finally, they voted to allow the meeting to be adjourned if necessary. This is a protective measure to ensure that to raise not enough support for certain proposals at the initial meeting, they can take more time to gather additional votes or proxies before making a final decision. The vote to authorize adjournment passed with a comfortable majority. This section is usually where you'd find detailed financial statements, but in this 8K, it mainly lists the exhibits that support the information provided. This exhibit is the official filing with the state of Nevada formalizing the increase in authorized shares. It's the legal documentation of that big structural change. And here is the actual amended stock plan document detailing how equity awards will be managed. This last one is for the digital filing system making the information machine, readable for analysts and regulators. Now let's look at this from a higher level. CNS Pharmaceuticals is making some bold moves. The big increase in authorized shares is a double-edged sword. On one hand, it provides significant flexibility for future fundraising growth and employee incentives. This could be essential for a biotech company needing capital for extensive research and development. On the other hand, it significantly increases the potential for share dilution, meaning the value of each existing share could decrease if a large number of new shares are issued without a corresponding increase in company value. The shareholder approval of these changes, including the stock plan and the amendment to the Articles of Incorporation, indicates a level of trust from their investors in the company's leadership and their strategic vision. The overwhelming ratification of the auditors and the general approval of executive compensation signals a relatively stable and trusting relationship between the company and its shareholders at this moment. The real test will be how CNS Pharmaceuticals uses this newfound flexibility. Will they be able to translate that authorization for more shares into genuine value creation through successful drug development and commercialization, or will it lead to excessive dilution? Without proportional growth, the market will be watching closely. Alright, that is our breakdown of CNS Pharmaceuticals Incorporated's latest filing. What is your take on these share structure changes and what they might mean for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description below to join the conversation. Thanks for watching. See you next time.